I was curious as I'm listening to you, you talked about research for your master's, and I want to connect a thought to that research word that you made. And in addition to that, you talked about your family office's role, where you're building relationships with family offices. I'm curious, Alex, what are the top 3 reasons that Fidelity really wants to partner with family offices, in your opinion?
Yeah, it's a great question, and to your fantastic introduction on the firm, we've I think one of the things that working at Fidelity has really been enjoyable to watch is how the firm embraces innovation and how the firm has evolved. Certainly over the last 16 years since I joined the firm, it looks and feels very different from what it was, back in 2006. And I think that sort of evolution is something that the founders pay really close attention to. You mentioned Edward Johnson III, Ned Johnson. Abigail's father. He actually passed away a couple of weeks ago at the age of 91. He took over the company in 1972. It was really a small mutual fund company at the time. And he's credited with really helping to change the way the middle class thought about its money in the U.S., transforming Americans from savers to investors, basically. He was really innovative. I would say he's largely responsible for the democratization of investing, bringing the middle class into the capital markets. Wow. And I think, turning Fidelity into one of the world's largest asset managers, as you mentioned. And Abby who's been running the company, for the last several years, has been continuing that innovation. For example, right now she's democratizing access to cryptocurrencies for investors, making them available in 401ks in the U.S. Our history in Canada is similar. We came to Canada in 1987. Actually, we opened our doors on Black Monday, the day of the infamous market crash in October of '87. And we've grown to one of the largest asset managers in Canada with around $210 billion in assets here. I would say through innovation, through a proven performance, through an enviable suite of investment vehicles, and through partnership with financial advisors. We have not had any of our own distribution in Canada. Our distribution has entirely been through MFDA and IROC licensed financial advisors. And that has really served us well. We've earned the trust of advisors over the last, since we came to Canada in the late 80s. However, to your point, when you look at the investment industry in Canada today, you'll notice that the 2 fastest moving or the 2 fastest growing segments in the industry are at sort of the 2 extremes. It's, on the one side, you have the do-it-yourself space, the robo-advisor channel. And then on the other side, you have the ultra-high net worth space, family offices and private wealth. And I would argue that the ultra-high net worth space in Canada is largely underserved. Intergenerational wealth is relatively new in Canada, as you know, and the family office industry is still in its infancy here compared to other parts of the world. But I think we're beginning to see, a catch-up happening in Canada. So this is really Fidelity continuing to evolve. Being a private company allows us to invest in new areas with a focus on the long term. We don't have to worry about hitting quarterly earnings expectations. I would say the second reason that we want to partner with family offices in Canada is that we think we have the experience to do it well. I think the ultra high net worth space has been served by niche players, and Fidelity in the US has been working with hundreds of family offices, both single family offices and multifamily offices, for over a decade and a half. We have a dedicated family office services group that offers fully integrated services for the family office community in the U.S. We're also able to leverage, a lot of that experience and bring value to the space in Canada, including through thought leadership on a wide range of issues for family office executives and family members. We can share insights into family office investment behaviors and best practices. CIOs often come up to us and inquire about the activity of their peers. So one of the things we do in the U.S. is we survey hundreds of family offices every year on several key investment and operational areas, things like asset allocation, private equity, co-investments, cryptocurrencies, and we publish the key findings in a detailed study that we're able to share, including to family offices here in Canada. And then I would say the third reason, we believe we have an enviable range of investment offerings for family offices as well, and we're dedicated to continuing to develop that range of investment vehicles. We probably have the most complete lineup of solutions in the Canadian industry, including tax-efficient investment vehicles, a wide range of ETFs, alternatives, cryptocurrency, on the alternative side, market neutral, long, short, so, which are available in liquid alternative packages. So bringing the best features of hedge funds to the market without the concerns around liquidity and for a fraction of the cost as well. So we're really working on continuing to develop that lineup of investment solutions that we think, we've for many of these, we've earned the trust of advisors for decades here in Canada. And some of them now we're looking at launching that are more attractive to the ultra high net worth segment and more tailored or customized for the ultra high net worth segment.